Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. Thank you so much for joining me on this Friday afternoon, August 22nd. Summer is winding down. Hope you all had a great week out there. And we are here each and every Friday to recap the week in precious metals and look ahead to the next couple weeks. Another great week for precious metals. Another week where we saw gold underperformed the rest of the sector. Gold was higher thanks to the action on Friday, but the rest of the sector, the stocks, they're continuing to outperform the metals. Good action in silver. Looks like it might test 40 next week or the week after. Things are looking good in the short term, at least. Let's talk about it. Let's get to the video. So starting off here, we have our market overview. These are, call it 5-month bar charts here or 6-month bar charts. 50-day moving average is the first moving average. The one below is the 200-day moving average. And the Fed was very dovish today. I don't follow Fed speak and Fed statements that closely. I don't think they're that important. But we did see a strong move in stocks. And we saw the same thing in gold stocks. And we can see here's GDXJ. Great move here. But circling back to the start, we can see the spot gold price here. It looked like it was losing the 50-day. Now it's back up. Silver held the 50-day moving average here. Another hold right here. So that is looking good. Gold against the stock market. You guys know I love looking at this ratio. Hanging at the 50-day moving average here. Will this start to move up like that at some point? I think it will at some point, but don't rule out a potential false breakdown like that before I move higher like that. So keep that in mind. Here's GDX. Continues to hold above the 50-day moving average, pushing higher. GDXJ, same thing, although it did dip below the 50-day moving average here. I'll get into the measured upside targets for the miners. SIL silver stocks, same thing, higher high. Yield curve, still going sideways like that. So that's where we are for our initial comments, and let's get more specific, starting off with gold. So here is the spot chart of gold. Spot the candle charts, daily candle charts here. We can see 150-day moving average here, the 200-day moving average here, and here's gold against the S&P 500. So here's the 200-day moving average. Gold is still way above that. Now, it doesn't necessarily have to test the 200-day moving average, but if you look what happened in 1972, or I should say early 1973, after gold had that initial correction, it came within about 3% of testing the 200-day moving average. And that corrective move took about 5 months. And so we here are a full 4 months in. My point being, even if gold were to move higher like this, maybe there is still one more move where it could leg down like that. And then the 200-day moving average is closer to it. So don't rule that out. I don't think we're going to shoot higher like that, but I'm still holding my stock. So even if I'm wrong here, we still probably make money in the short term. Gold against the S&P here. This is the key resistance here, just above 0.54. When we get a move above that, that's really going to help the precious metal sector. But here and now, it's trying to bottom. It's just scaling along here. This is really strong support. And the move in precious metals will be at its strongest when gold is outperforming the stock market. And so that is not happening here and now. That's one reason I don't think this can break out in the short term. Now, moving on, let's talk about silver. Again, this is the spot silver chart here, the daily candle chart. And we saw this at the end of July, early August, held the 50-day moving average here, rolled over here. This week, another good hold of the 50-day moving average, closed just below 39. So this puts silver in good shape to not only break 39 and 40 here, but to probably in the next couple weeks get to that 41, 42 target, which we've been talking about for a while. That's a strong target. So that will be significant for silver. And here is the futures chart for silver. This is the futures market, the continuous contract. And I pointed this out in past videos, but we can see here in June, this was a clear retest of the breakout. You had a retest here, and then you had a higher low here, and then the last couple of days, that's another higher low. So this is pushing up, and even if it consolidates at 40, this is 37, you might get a little action like that would measure up to 43. But this breakout here, nothing's changed. It continues to measure up to 41. And when we look at the monthly chart of silver, the weekly chart, 42-ish is the next significant resistance. So for the spot market and the futures market, I think we're going to 41, 42 in silver in the next couple of weeks. Now, before we get to the stocks, I just want to say thank you to all who signed up for the Daily Gold Premium. I appreciate you. I appreciate your business so much. It's you that allow me to do the work that I love to do. Those of you who own minors and juniors and haven't subscribed yet, I really think you should consider our work and our service. I think we can help you benefit. Our goal is to get into the right stocks at the right times, get into those quality juniors and sometimes larger minors that have significant upside. We're looking for stocks that can do 5x potential over the next couple of years, and in some instances, the ones that have 10x potential. And we're still finding good companies that are really good values at this point. But the time to act is sooner rather than later. So we'd love to have you come aboard the Daily Gold Premium. Thank you. Now, getting to the stocks. So this is what we're seeing here. These are the weekly candle charts for GDX, GDXJ, GOEX. You've heard me say it before. I like this as a better junior index than GDXJ, but GDXJ trades a lot more volume. It just has some big companies in it. So the breakout in GDX past this 4.5-year long base projects up to a measured upside target of 63. So that's where we're at 60 now. So we're getting closer to that measured upside target. For GDX, this breakout projects up to, I believe, 81 or 82. We're getting a lot closer. GOEX, I believe 53, 54. So if we look at the action, it's clearly been strong the last couple of weeks. Lots of white candles, lots of closes at the high of the week. So miners are looking good. This is probably going to continue this strength for a little while longer. And same thing for silver stocks. The last couple of weeks here, we can see that was a breakout in SIL from a 12-year long base. So real significant breakout there. SILJ, the silver juniors, right behind it. That's getting ready to do the same thing. So silver stocks are setting up where they can really outperform the gold stocks moving forward. And what's really powering all of this right now, even though gold has been consolidating and silver has just been slowly moving higher, is the fact that the miners here, they're outperforming the metals. And we can see, here are the various charts. GDX divided by gold, GDXJ divided by gold, SIL divided by silver. And here we can see GDX divided by gold. It broke out of a 2-year long base here. So from a bird's eye view, this outperformance is just starting. This breakout here, it's hard to see these numbers, but this has a measured upside target really close to here. And I would think it moves a little bit higher to the red line. Then you're testing a 12-year long base. That's GDX divided by gold. So gold stocks, and same thing here. This is GDXJ divided by gold. It broke out very recently. That's a 3-year long base. The measured upside target for this projects pretty close to these two red lines. So you're getting into multi-decade long resistance here. That's where this ratio should leg up to. And it's not just gold stocks outperforming gold, it's silver stocks outperforming silver as well. Here's SIL divided by silver. Earlier this year, it broke out of a 2-year long base right here in the spring. And what happened recently? Well, it's broken out of a 3-year long base here very recently. And this should continue to move higher like that. So the miners are outperforming the metals right now, and that's going to continue. Very, very short-term breadth indicator, because I'm going to talk about breadth more. But this is a very short-term breadth indicator. So we have the GDX advanced decline line here. Here's GDX. The advanced decline line measures the cumulative participation of all the GDX stocks. So day in and day out, we're looking at how many are rising versus how many are falling. And so this is a cumulative reading. So every day it's totaling that up and applying it to the previous totals. And so we can see here, the advanced decline line is very strong in the last couple of days. What does that tell us? Well, it tells us that we're seeing strength across the board with respect to GDX stocks. And that's what we want to see. We don't want to see only a couple stocks moving higher. We want to see this. So this tells us that the strength in the very short term is likely to continue. But I talked about this last week, and I mentioned it to premium subscribers. Breadth indicators, some of the medium to intermediate term ones, they're getting way too overbought at this point. And we can see down here, the golden cross percentage, that is at 100%. The bullish percentage index, another breadth indicator, that's at 100%. This I have not updated yet, but we're looking at this moving average here is the 50-day moving average of the percentage of Huey stocks that close above the 200-day moving average. And we can see the moving average here. This is at 99%. So the 50-day moving average of this percentage of Huey stocks above the 200-day, that's almost at 100% for the last 50 days. So we're starting to see some significant overbought conditions. It's good to get overbought early on and correct and then get overbought again. But when you stay overbought for too long, that's when there's an issue. Now, last thing here, this is another great breadth indicator by itself, the new highs divided by the new lows. So the new highs percentage is right here. I look at a 20-day exponential moving average of that in blue. And so we can see here, these two lines are at 25% and 30%. Look at where these peaks were. This was like 34%. This was, I want to say, 29%. This was at 32%. And we are coming up, we're at 21% right now. So we are coming up to a point when I think we're probably going to finally get that correction in miners. There's still some more upside here in the short term, but we have to be wary because breadth is telling us we're getting too hot and we're probably going to get an interim peak at some point. That doesn't mean we're going to correct. We're going to see what happened after 2020 and 2016 or even 2019. But it just means we're probably headed for an interim peak. I mean, when we were at this point earlier this year, we didn't even have that bad of a correction. It was really a running correction. But anyway, I digress. So finally, the short-term charts, this moved down here. I thought we were correcting, so I got faked out, but I didn't sell anything because you don't try and trade in or trade out of a bull market. But now we can clearly see GDX is broken out of this pattern. GDXJ broke out of this pattern. So the measured upside targets, again, 63, I believe 81, 82. SILJ, I don't have a target at this point. But we'll see. That's where we are. Thank you so much for tuning into the video. Hope you all had a great week. And leave a comment. Let me know what you think. Would love to hear from you. And I'll talk to you guys again in the next video. Thank you. Have a great weekend.